If you look at the headlines, you see layoffs. But if you look at the balance sheets, you see record profits. These two things shouldn't be happening at the same time. Traditionally, if you fire your workforce, your company dies. Labor was the fuel for growth. But in 2025, that engine has been replaced. I've been tracking a critical metric in the portfolios of the smart money: revenue per employee. Let's look at the history. In 1950, General Motors had 500,000 employees. They were the engine of the middle class. In 2015, Google generated billions with just 50,000 employees. In 2025, OpenAI is generating comparable revenue with under 2,000 employees. This trend line is not an accident. It is the great decoupling. The link between corporate growth and human employment has been severed. You are being told AI is a co-pilot, that it will make you more efficient, that it will free you up for higher-level work. That is the polite lie told to keep the peace. The smart money knows the truth. AI isn't a tool for the worker. It is the replacement for the worker. Capital is declaring war on labor, and for the first time in history, capital doesn't need us to win. To understand the investigation, we have to look at the weapon, the business model. For the last 15 years, we lived in the era of SaaS, software as a service. Salesforce sold you a tool. You hired a human to use the tool. The software cost $50 a month. The human cost $5,000 a month. The human was the expensive part of the stack. But now, we are moving to service as a software. Salesforce isn't just selling the CRM anymore. With Agentforce, they are selling the salesperson. Look at Klarna. This is the smoking gun. In early 2024, Klarna deployed an AI customer service agent. It didn't just assist the humans, it replaced 700 full-time agents. The data is terrifyingly impressive. The AI handled 2.3 million conversations. It spoke 35 languages fluently. It worked 24/7. It didn't get sick. It didn't ask for a raise. And crucially, it boosted profits by $40 million in year one. This isn't efficiency. This is a hostile takeover of the payroll department, and it's spreading. Duolingo cut 10% of its contractors because AI translates faster. IBM paused hiring for 7,800 back-office roles, stating explicitly that AI would do those jobs. The smart money is looking for companies that can fire their way to profitability. Here's the economic physics that makes this inevitable. It comes down to two curves crossing on a chart. Curve A is the cost of human labor. It is sticky. It goes up with inflation. Humans need food, healthcare, sleep, and psychological safety. We are high-maintenance biological machines. Curve B is the cost of compute. It follows Moore's law. It crashes by 50% every 18 months. When you are a CEO, you look at these two curves every single day. One is getting more expensive. The other is plummeting towards zero. We are approaching the crossover point, the moment where a digital agent is not just cheaper than a human, but 100 times cheaper. Once we cross that line, there is no going back. Capitalism flows like water to the path of least resistance. If a task can be done by a GPU, it will be done by a GPU. The smart money is dumping stocks that rely on heavy headcounts, like consulting firms, call centers, and legacy BPOs, and loading up on the companies that sell the digital labor. They are betting on the deflation of work. For years, the advice was simple: learn to code. We thought automation was for blue-collar jobs. We thought robots would build cars and flip burgers while humans did the thinking. We were wrong. The robots came for the poets, the coders, and the accountants first. This is the great irony of the AI revolution. Physical labor is hard to automate. Plumbing is hard. Electrical work is hard. Moravec's paradox tells us that high-level reasoning is computationally easier than moving a hand to catch a ball. So the AI didn't come for the plumber. It came for the junior developer. Look at the rise of Devon and GitHub Copilot. We are seeing the commoditization of syntax. Writing code is no longer a scarce skill. It is becoming a commodity as abundant as oxygen. This collapses the wages of the cognitive class. If you are a junior lawyer, a copywriter, or a mid-level coder, your value proposition just evaporated. The barrier to entry for creating software has dropped to zero. This means we will have more software, but fewer software jobs. There is a secondary consequence to this that nobody is discussing: the death of the apprenticeship model. For centuries, the way you became a master was by being a junior. You did the grunt work, you summarized the documents, you wrote the basic tests. That grunt work was your tuition. It's how you learned the trade. But AI agents are now doing the grunt work. Why hire a junior analyst to summarize a spreadsheet for $80,000 a year when an agent can do it in 4 seconds for $0.08? So the corporation stops hiring juniors. But if you never hire juniors, where do the seniors come from in 10 years? We are burning the bridge behind us. The smart money sees this coming. They know that human capital is about to become incredibly scarce at the top end and completely worthless at the bottom end. The career ladder is broken. The bottom rungs are missing. This creates a barbell economy. At one end, the owners and the architects. At the other end, the physical service workers. The middle, the email job class, that is the kill zone. Sam Altman, the CEO of OpenAI, predicted that we will soon see the first one-person unicorn, a company with $1 billion valuation and 1 employee. Think about what that means for the economy. In the old world, Kodak had 140,000 employees to generate billions. They supported families, towns, pensions. Instagram had 13 employees when it was bought for $1 billion. The next Instagram will have 0 employees. Just a founder and a fleet of agents. This is the hyper-financialization of the economy. Wealth is concentrating into smaller and smaller hands. If you are an employee, this is a nightmare. But if you are an investor, this is the most profitable setup in history. Because all that money that used to go to payroll, it now goes to free cash flow. It goes to dividends. It goes to buybacks. The margin expansion we are about to see will dwarf anything in the 20th century. Now, you might be asking, if nobody has a job, who buys the products? This is the macro trap. If we delete the consumer, we delete the economy. The smart money is aware of this. This is why you see Silicon Valley billionaires obsessed with UBI, universal basic income. They aren't doing it out of charity. They are doing it out of self-preservation. They are trying to build a floor under the consumer so the game can continue. But UBI is just welfare 2.0. It will likely be inflationary, printed money. This is why the ultra-wealthy are buying bunkers in New Zealand and farmland in Hawaii. They are hedging against the social friction of the transition. They know that the period between the death of the job and the birth of the Star Trek economy is going to be messy, and they are positioning their portfolios to survive the chaos. So, how do we position ourselves for the great decoupling? The smart money playbook is defensive and offensive. Defensively, you must audit your skills. If your output is text on a screen or organizing information, you are in danger. You must pivot to real-world skills that require physical presence or high-level strategy that requires complex human empathy and judgment. Be the architect, not the bricklayer. Offensively, you must own the robots. You cannot compete with a zero-cost worker. You must employ them, or owning the companies that employ them. This means investing in the pick-and-shovel plays of the agent economy. Don't just buy the AI wrapper companies. Buy the platforms that host the agents. Buy the semiconductor companies that power them. And most importantly, own the scarcest asset of all, equity. Labor is losing its leverage. Capital is gaining it. You need to move your money from the labor side of the ledger to the capital side. The era of the employee is ending. The era of the owner has begun. This is the smart money wisdoms. The future belongs to the owners.